In this video, I'm going to be sharing with you guys the differences between Binance futures trading and Binance margin trading. Now, in case you don't know, I already have videos and tutorials on these two kinds of trading. I have a full guide that will teach you how to do futures trading on Binance, and also have another full guide that will teach you how to do margin trading on Binance. If you need tutorials on this, the links are in the description below. Now, after making tutorials on these two kinds of trading, a lot of you have been asking me what's the difference between futures trading and margin trading, and that is why I'm making this video. And in case you don't know, futures trading is a kind of trading where you are trading futures contracts to go up or down, and if you go in your direction, you make profit. While margin trading is a kind of trading where you borrow funds from a third party to carry out your trades. Now, before I go into the differences between these two kinds of trading, if you are new to my channel, welcome. My name is Femi Olaniyan. I make videos on personal finance, crypto trading, and how to make money online. So if you love content like this, ensure you subscribe to my YouTube channel and like this video. Thank you. Now, the first thing you need to take note of is that the futures market and the margin market are two different kinds of markets. You need to take note of that. Now, the first difference between futures and margin is that for futures trading, you don't actually buy the crypto, you are only trading a futures contract. It's not like saying you're only predicting whether a futures contract will go up or it will go down. That's where you say you are longing or shorting. So if you are longing, you are predicting that it will go up. If you are shorting, you are predicting that it will go down. While for margin trading, you are actually buying the crypto itself. It's just like you are doing spot trading, but you are using leverage. So if you've been doing spot trading, you know you are not using leverage. But for margin, it's just like spot trading, but you are using leverage and you are borrowing funds. Now, the second difference is concerning leverage. Now, in case you don't know, you are using leverage in both futures and margin trading. Now, what's the difference? Now, for futures trading, leverage can vary from 10x to 50x to 75x and even 125x, whether you are using cross margin or isolated margin for futures trading. And also, the leverage can also vary depending on the trading pair that you are using. Now, for margin trading, you are using a smaller amount of leverage. Now, you are using 3x leverage for cross margin trading, while you are using up to 10x leverage for isolated margin trading. So you need to take note of that. And also, in case you want to learn how to use leverage to make more money for yourself, or you don't know anything about leverage and you want to learn that, I also have a full guide on how you can use leverage to make more money for yourself with futures trading. The link to that video will be in the description below. So that's number 2. Number 3 is that for futures trading, you don't borrow or repay funds. You don't borrow or you repay funds. You don't do that for futures trading. While for margin trading, you borrow funds to have more money to trade, and after your trade, you repay the funds that you borrowed. So you need to take note of that. Now, the fourth difference is the fee you are paying. Now, for futures trading, you have to pay your trading fees for every trade you take, and you are paying about 0.02% on every trade you take for futures trading. Now, for margin trading, you will also pay your trading fee, yes, and you will also pay an interest on your debt. So the funds you are borrowing while doing margin trading, there is an interest fee going on that debt. So there is something called hourly interest rate that is going on that debt or the funds that you borrowed. So you are going to be paying that, and you also be paying your trading fee. So these are the main differences between futures trading and margin trading. And there are 3 major similarities between them. Number 1 is that they both use leverage. Number 2 is that for both kinds of trading, you can use cross margin and isolated margin. And the third one is that you can long and short your trade for these 2 kinds of trading. So you can long and short for futures, and you can also long and short for margin trading. Now, in case you also want to learn what cross margin or isolated margin mean and how you can use them in futures trading and margin trading, I also have a dedicated video on that. I'll put the link to that video in the description below. So these are the differences and similarities between futures trading and margin trading on Binance. Again, if you want to learn either futures or margin trading, I already have videos on them. The links to those videos will be in the description below. And if you have any question whether about futures trading or margin trading, drop them in the comment section below. I'll be replying to every comment that I get. And if you have any video you want me to make about crypto trading, about Binance, about Bybit, or any crypto platform, let me also know in the comment section below. I'll see you guys in another video. Bye.